Nationally, the apartment market has seen rent growth levels easing, but there are some spots still producing some impressive hikes, and one of them, Columbus, Ohio. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Columbus update. The Ohio state capital wasn't immune to the seasonal slowdown that we saw in the nation's apartment market in Q4 of 2012, but Columbus still ended the year in strong shape. Let's kick it off with rent growth. Columbus led the Midwest region with 4% rent growth in 2012. The only others above even 3.5% were Detroit and Wichita in the Midwest region, and the regional average was 2.6%, which was 40 basis points below the national norm of 3.0%. And this is not a new story for Columbus, as you can see from this chart. Annual rent growth is measured at 4% or better in each of the past 7 quarters. And now the market is down from that peak of 5.9% that we saw in Q3, and that was the Metro's biggest hike that we saw in more than a decade. But 4% is still quite strong. And rent growth has been especially strong on the west side of the Metro, 6.8% in the West Columbus submarket, 5.8% in Dublin Hilliard, 4.2% in Upper Arlington, Northwest Columbus, and right around 4% in a handful of other spots, including Gahanna, Northeast Columbus, Downtown University District, and North Central Columbus. So rent growth at consistently strong levels, you'd expect to see occupancy in good shape, and you'd be right, 95.5% as of Q4, and that was down 80 basis points quarter over quarter due to that seasonal easing, but still up 80 basis points year over year, so trending in the right direction. All but 2 submarkets in Columbus were above 95%, including a ridiculously strong rate in Downtown University District, 99.2% over there. Also strong in those northern suburbs, 96, 97% in Dublin Hilliard, Westerville, New Albany, Delaware, Gahanna, Northeast Columbus, and Upper Arlington, Northwest Columbus. So what's driving this boom in the Columbus apartment market? And not surprisingly, the answer is quite simple in this case. It's the local economy. Columbus is obviously the home of the state capital, as well as to the Ohio State University. But Columbus has done a good job retaining a lot of that young talent coming out of OSU and also from other parts of the region. And that has obviously been a plus for the local apartment market. And job growth overall is the best levels that Columbus has seen since the 1999-2000 timeframe, around 20 to 25,000 jobs added annually in each of the past 2 quarters. Now, with the economy in good shape and with the apartment market fundamentals also strong, apartment developers have taken notice. At the end of 2012, there were 3,598 units under construction. That is an 8-year high for Columbus, and it makes Columbus one of only 3 Midwest markets seeing much development, Columbus and Minneapolis-St. Paul being the other 2. And it'll be interesting to see how the Columbus apartment market does absorbing all of this new supply. It wouldn't be surprising to see rent growth levels maybe easing a little bit more, but overall, if the economy continues to grow as expected, then the Columbus apartment market shouldn't take too much of a hit, and certainly the long-term forecast remains very favorable. And that wraps us up for Columbus, so until next time for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.